Welcome to the roller coaster, guys, aka Monday. Get ready for a volatile market. We're gonna see some ups and downs for sure, like we've already been seeing, guys. So hope you can hang on tight for what's gonna happen. Don't panic too hard. So should we celebrate or should we freak out? I don't know. I'm gonna give you my opinion on this and why is this happening in the first place. So I'm gonna tell you kind of why rates go up and why they go down so you can understand this. I'm gonna relate it in a way that literally a second grader could understand this. So this is a very important video, guys, and I'm gonna have other videos coming out over the coming weeks on strategies that you need to start learning, like reverse owner financing and other things that you can do going forward to minimize risk and increase your scalability in a stressed marketplace. Now, in this video right here, I'm just gonna break down what just happened and why this happened. So, Fed cuts rates to 0% or just above 0%. Some are saying 0.25%. I don't know, we're gonna see what's happening over the coming days. I just wanna get this out before you guys start freaking out, just so you can understand what's going on. Because personally for me, I think this is a good thing. I've talked to some people, they think it's a bad thing. I don't know, we'll see what happens. Now, just to give you an idea, Trump has been pushing for this. We've already had announcements that this is gonna happen a couple times this year. There are places around the world right now that have negative interest rates, meaning they actually have to pay banks to put their money into them. Instead of the bank paying them to hold their money, they're paying the banks to put their money in there. Think about how crazy that is. But Trump thinks that by dropping interest rates down, you're gonna see the Dow explode. Now, right now, the futures for the Dow, this is Sunday night, do not look so great. They were down like 1,100 the last time I saw. And last week, on Friday, we had the biggest jump in the history of the Dow in one day. So the world's going crazy. I was just at Walmart a couple days ago. There was no water. There was hardly anything. It looked like the place had been ravaged. So guys, don't need to hoard supplies. Get stuff just in case, but you don't need to be like hoarding supplies right now. Don't panic. Literally, I did the math on this, and this is affecting literally, I think it was 0.0000, maybe one less so, 125 of the economy, or people in the country. So, should we be really freaking out this bad? I don't know. That's my opinion, that I think everybody's overreacting, not downplaying the situation whatsoever, and I think everybody needs to be safe, especially those of you who are a little bit older and have pre-existing conditions. But I think people should should continue on living their life the way they have been, and then adjust if it gets worse. But right now, guys, I don't think we should be having this panic the way we have. That's just my personal opinion, because people are asking. Now, you guys may have a different one. Put in the comment box below. Okay, so we have a Federal Open Market Committee. I believe they meet like 8 times a year or something like that. If I'm wrong, guys, put in the comment box below as well and correct me. And what they work on is trying to decide, by assessing what's happening in the country and our economy, should we increase the federal fund rate up or down, and why should we do this, and how is it going to impact what's happening in our daily lives? So right now, this is a stop sign. We are seeing a weak signal, right? They're saying the economy is looking weak. You've seen the stock market go from like 29.5 down to like 22 or something like that. It's getting crazy, right? Bouncing around like a ping pong ball. So you need to understand what the Fed does. The Fed has a couple big goals. Number 1, reduce or minimize unemployment. That is a good goal. We want unemployment as low as possible, which is the lowest, from what I understand, it's ever been, according to the statistics I'm looking at. And number 2, to avoid inflation. Obviously, we can all agree inflation is not good. So here's what you need to understand. This is a band. This right here is the economy. This is a little superhero, right? Flying through, hopefully strong as can be, right? But if they get above this top ceiling and they go past this, we will fly into inflation, which is not good. That's like kryptonite for the economy. But if we fly too low, we go below the floor and we go into what's called a recession. That is also like kryptonite for our little Superman economy, okay? So we go up and down like this, and the Fed is watching all the variables, all the economic forces to decide, should we raise or lower interest rates? Okay, so right now we are coming down like this. And people are freaking out that we're gonna go into recession. All the stories on the news are helping induce this because a giant crisis of mass consciousness that really played a big impact on this is a lot of this is emotional, right? The threat is not as bad as what people think. Some people are screaming at here today saying I'm incorrect. Guys, you asked for my opinion. This is an opinion channel, but I don't think people should be reacting the way they are. Personally, I'm hoping it blows over and maybe we come back in a few weeks and I'm wrong and you guys can say I told you so, and you have the right to do so. Okay, but we're flying low, too low in the future, and that we're looking like we could potentially go below into a recession, right? So what happens in a situation like this? So when things are cooling off too much, the Fed drops interest rates to hopefully heat them back up. Now, if we're going up too fast and the economy's exploding and it's running too hot like an engine, to slow it down, take the foot off the take the foot off the pedal a little bit, they raise interest rates to take the heat off the economy. So if it's going too fast and it's like a rocket launcher taking off too quick, they're going to raise interest rates to slow us down. And if it's head towards a recession, slowing down, they're going to decrease them to increase activity and to put more money in your pockets, essentially. So if you pay a higher interest rate for something, or you borrow money at a higher interest rate versus a lower interest rate, which one do you pay more for? A little bit or a lot? The higher the interest rate, the more you're paying for that loan, essentially, so you have less money in your pocket. So the idea is, let's decrease interest rates so you have more money to spend. Also, you can borrow money for cheaper so you can make bigger purchases like buying a house, right? So personally, I think this is going to make houses more affordable. You're gonna see a lot of activity once people start getting over this fear that they're somehow going to go out there and contract something that's gonna potentially take their life. I get it, this is a serious issue, but to be honest, if you really look at the studies out there and you really study what's going on, I don't think it's near as bad as what people think. I don't think it's bad enough to be causing this global basic meltdown. Once again, that's my opinion. Now, if we can get back to where people are out there shopping, which I think this is going to increase the likelihood that they do for houses, because they can now buy one essentially for cheaper because they can borrow money for less, which long term over the course of a loan is a lot less money. If you go to an amortization calculator and just look at the difference of a $400,000 house loan dropping interest rates by 1 point, this is gonna be great, right? So Fed drops interest rates, drops the federal funds rate, which following that, traditionally, not always, we see banks start to drop auto loans, credit card rates start to go down. Usually that's what happens first. And then we see potential mortgage rates drop as well. So not always, but typically that's what happens. So that's really what's going on, guys. The Fed is seeing we're dipping towards a potential recession. So they're dropping interest rates to spur the economy, to entice investors to go out there and invest and borrow money, hopefully putting more money in people's pockets. So if interest rates drop, guys, what is a great thing to do? If I was you and you have cash flow rental properties, I'd be refinancing all of them if you can. Also, if you own a house right now, I'd be refinancing as well. If you're an agent, why not go work with real estate investors? If you guys can get lower interest rates to buy properties, that means you can find worse deals, because the same deal with a lower interest rate is now a better deal, if that makes sense. So there's lots of good things coming. I think I'm gonna film a video really kind of breaking this down in detail. As well as I have other videos that I'm already thinking in my mind I want to film for you guys of certain strategies that you can implement. I have one that I'm filming tonight for you guys on reverse owner financing that I think each and every one of you should watch if you're an owner finance investor, because one of the first things that happens for real estate investing when we do go into a recession, if we do go into one, is creative financing strategies become way more valuable skill sets to have, because traditional financing, aka the banks, gets harder to work with, and that traditional way of doing business kind of starts to collapse. And those of you who are creative investors who have more tools in your toolbox or more clubs in your golf bag are going to really capitalize. And owner financing has many different variables to it. I'm gonna talk about one called reverse owner financing, guys, so check out that video. I'll probably put it out this week. Other than that, guys, I'm going to keep an eye on this, and I want to probably put some other videos out addressing the overall situation with what's going on with the health crisis that we're seeing and how it's going to impact the real estate market. Hope you like this video, guys. I hope this kind of gave you a good visualization of why this is happening, and I'll see you on the next. So guys, I turned the camera off. I had intended to end the video, but I want to add something on top of this video here real quick, because a lot of people, I'm getting emails and texts from what I'm going to do with my portfolio in the stock market. And what I'm going to do is what I said I was going to do a couple weeks ago. I'm still going to ride out the storm. I haven't sold anything. I plan to stay in. It's a long-term play for me. Now, if you're doing a short-term, different strategy, guys, you may want to take a little bit different stance on this and be picking your spots. But the other thing I'm going to do, and I'm not giving you legal advice, I'm not a CPA, not a stockbroker, but I do invest, is I'm going to be targeting stocks that have had 50% drops over the past couple weeks. That are strong companies that there should be no reason for that company to drop this much, and I'm looking for the spring back. So I'm gonna get hyper aggressive. I'm gonna throw a bunch of money in, and I'm looking to be pretty bullish, I guess you could say. And I'm gonna put a decent amount of money in here, probably this week, even next week. So I'm looking, if you guys wanna send me some good stock tips behind the scenes, I'd be glad to look at anything that you're looking at. As well as if you wanna ask me what I'm gonna look at, I can kind of point you in the right direction. Some of them are real estate stocks. But for those of you who are asking, that's what I plan to do. Plan to ride it out, guys. I'm gonna stick it out, just like I said. And as well as I'm looking to get aggressive and purchase this week. Other than that, guys, see you when I see you.